Welcome, everybody, and this is indeed the kickoff of the Catalytic Capital track, although there was a terrific session yesterday. How many people were there at the tonic session? All right, so you're all practitioners already, as you've solved all the Catalytic Capital and the gaps, and so this will hopefully move the conversation forward. We have been delighted to be on the Catalytic Capital beat for many years, and it always ranks among the highest when we do reader surveys as what folks are interested in. And I agree with that, because it's always the interesting deals, the innovative finance, the levers that you can pull to make things happen. Much more to write about in Catalytic Capital deals than some straight up boring commercial transactions. So it makes for good stories, and hopefully it helps sort of socialize the concept. And I think that's kind of what we've thought of as our role in this ecosystem is. There was a time when you would hear about concessionary capital or below market capital or all kinds of things that sounded kind of desultory. And then instead, now we're talking about catalytic capital and impact first and blended finance and much more uplifting, don't you think? And so let's jump right in, actually. Actually, no, this was my segue. Impact first. We called. We have one of our agents of impact calls last week, and we declared the surprising resurgence of impact first investing. And it was a little bit of a flyer because I didn't really have the data necessarily to back it up. But I do feel both the energy on that call and then particularly the energy around SOCAP here, that there is a surprising resurgence of impact first investing. And I think it is in part a kind of meeting the moment sort of phenomena, and perhaps a kind of backlash to the backlash. And folks want to see impact, want to see good things happening in the world where some other things are happening as well. And so it sort of responds to an impulse, and I think it thus sets up our conversation today, which is to say, how do you do it, and what does it amount to, and and where do we go from here? So with that, let's start with you, Greg, and you can see who folks are, so I don't necessarily we need to introduce them, and folks will give a little more background on their own work in the course of their answers. But really kick us off with an idea of I think Ceniarth, folks know, has deployed something like $500 million in what would be Catalytic Capital, and just say how you see it and where we're going.
Sure. Thanks, everybody. I did not know that the ground rules were that we couldn't be a jerk. Being sort of a provocative jerk is kind of Ceniarth's brand, so I'm going to have a tricky time with my answers. But David asked me to kick off with a big idea, what's sort of on our minds. And, I think Ceniarth has sort of made it our principle to not have big ideas. So, I think that allocators should probably have less big ideas and should focus on getting money out the door instead of having clever ideas that they can talk about on stages. We're not revolutionaries, we're not radicals, we're not dismantling systems or sticking it to anybody. We're just a family office. In fact, we're not even that. We're just one person. We're Diane Heisenberg and her staff, who believe that poverty and inequality are intractable challenges that exist now. They're going to exist in 100 years from now, and we're trying to get capital out the door to make people's lives a little bit better every day. Now, if you're out there in the audience and you're a big systems change person and you solve poverty, mazel tov, you put us out of a job, that'll be great. We will celebrate you. But in the meantime, we're just going to get on with it in terms of getting dollars out the door and trying to make a difference in the sectors that we make a difference in. And the last thing I'll add on this is, I think that particularly the family office space has been way too, and I said this on David's call last week, has been way too precious about how we approach how we approach all of this. The beneficiaries that we serve, whether they are small farmers in sub-Saharan Africa or low-wage workers in the Deep South in the United States, or small shop owners in Latin America, they don't care why any of us do the work. They don't care if we're clever. They don't care if we do it because we're religious. They don't care if we do it because we think we're geniuses. They just care that money gets down to the communities that they serve. So, that's my call to action. My big idea is just do the work. Stop talking about why you do the work. Stop worrying about why you do the work, and just get dollars into communities.
Okay. Urmi, the Catalytic Capital Consortium has played a big role in kind of bringing this whole community together. And there was a time, I think, a year or so ago, a couple years ago, when the groundwork had been laid, and you were going to call it a day and let the field go forward. And there was a surprising resurgence and a surprising interest from the field, and said, no, this is a very valuable convening and table to be at. And so now it's off and running for 2.0 as the track says. So just tell us how you see the field developing.
Thanks, David. And actually, it's good to be sitting next to Greg. We did a SOCAP panel last year as well, and I end up, I think, seeing myself as the counterpart to the provocative piece, because my voice is the steady one. But I also laugh when I say that, because Greg is also part of the Catalytic Capital Consortium, and Ceniarth has been a funder and a steady partner all through these years. Anyway, and I will say something which is, I think, hopefully a little complimentary to what Greg is saying, rather than oppositional. So as David noted, C3 is the Catalytic Capital Consortium. We are an investment, learning, and market development initiative started about 5 years ago, initially by MacArthur, which is my day job, Omedyar, and Rockefeller, and now we have 10 more funders who have joined us last year. So the idea here is to really promote knowledge and use of catalytic capital in furthering the SDGs, working closely with investors and field builders. So what we have done through the years is deployed MacArthur's own capital. This is about 128 million across 12 enterprises, or 12, I would say, investees. And we'll have a chance to talk about them later, maybe during this SOCAP meeting. In the afternoon, there's a session that my colleague John Balbach is moderating with some of our field partnerships that receive this capital, and they'll talk about the tremendous impact and leverage. I think they've all contributed towards more than 2.6 billion in capital being deployed on the ground by those investees and their partners. So there's the investment piece, and with the grant piece, we really work with a range of different actors, helping build the evidence base, supporting networks like Latimpacto, which Carolina leads, to create communities of practice, providing grants for model and innovative solutions that are going to be work towards deploying catalytic capital better, faster, hopefully. And then also partnering with folks like ImpactAlpha to really promote dialogue and discussion around catalytic capital. MacArthur, which has been in the field for a while, for over 4 decades, we've deployed, I think, north of 800 million in catalytic capital, saw this initiative really as an opportunity to give voice and structure to some of the learnings we have shared with others through the years and really used in our own work. And so, coming to your point, David, about the big idea, I would say, we are in a place where there's a lot of conversation, dialogue, momentum around catalytic capital. More and more people are stepping up, talking about it, wanting to be involved. But we are so far away from what we need to do. So my, thesis is that we really need to do more. There is room to do a lot more. We should be doing more. And this is not really only more of the same. I think beyond our own investing activity, we have to think about pulling together communities, investors activating other investors, like many of the folks that were on David's call last week and that are sitting here, including Greg at Ceniarth, are doing. Also need many more intermediaries that are thinking about ways to create structures, to pool capital, to provide ways of bundling money that can go to much, much smaller and diverse users down the spectrum. And we need a huge amount of effort in learning about models that can be replicated. We try to do some of that through C3's work with knowledge, resources, tools, but it is just one entity doing a set of things with one set of partners. So we really, really need folks to step up and think collectively about what will help us get this moving faster, deeper, broader. Thank you.
Great. Carolina, Latimpacto has been a terrific partner to ImpactAlpha in our ImpactAlpha Latin America, and we've been to some of the events, and you've been a terrific resource. You get the somewhat unenviable task of representing an entire huge region of varied countries and varied players, but maybe if you could tell us how your network both uses and receives, but also deploys Catalytic Capital, and just what's the state of play?
Thank you, David, and I'm happy to be your partner in Latin America and also working with the C3 Consortium. I'm representing here Latin America. Yesterday, for those that attended the session, you notice how not many of you are investing in Latin America. So it's not a region that you are prioritizing. Actually, we are your neighbors from the US. So for us at Latimpacto, our purpose is how we can promote a better deployment of capitals toward impact. And understanding Catalytic Capital is a priority for us. So with the C3, we found an opportunity to spread the knowledge, to bring more investors to understand the concept. Because what we are seeing in Latin America, that most of the people that are deploying money towards impact are philanthropists. So how we can also move the needle and how we can have more impact investors understanding this concept. So I completely agree with Greg when he mentioned that the final outcome should be how we can create transformations with the communities, understanding the needs. So having this partnership with the C3, it's really important for us because we are promoting boot camps, master classes. We also have a canvas to work with our members. We have more than 240 members, and we are promoting a community of people to understand what is Catalytic Capital. So this morning I was talking to our knowledge director, she's also here, and we're discussing the trends. And she mentioned, at the beginning, more people answer, yes, we are deploying Catalytic Capital. And then when we started to show what is the real concept of Catalytic Capital, they say, okay, maybe I'm not deploying Catalytic Capital. Maybe what I need is to understand what is this concept and how I can deploy better my resources. So through Latimpacto, something that we're promoting in the region is spreading the knowledge, is sharing cases, because for us, having people like Greg, and we also have investors in the region, is showcasing what is happening and how you can learn from your peer. So it's not learning from the academia, an abstract concept. It's how you can learn from your peers. It's how you can feel this concept that is close to you. So we are promoting all the time through our conference, through events, through bootcamps, masterclasses, and all these knowledge events is understanding the concept. And we have found that it's really important because we are growing the awareness of what is that. Understanding the concept, how you can innovate. And actually, it doesn't matter the concept, I agree with you. It's how we will deploy better our resources. It's shifting from projects to systems. Because we are finding a lot of investors saying, I will invest in this project. Okay, what is the system that you want to change? And it's something we are promoting with our members all the time. Let's understand what is the meaning of systems. So, and how you will measure your impact. So it's the whole track, is understanding the concept, is being with them, sharing with our peers, is how we can be part of them and how we can support the deployment of this capital and how they will measure the capital. So it's the whole track that we're working, and being part of the C3 is a good opportunity because we are the sister networks of Impact Europe, of AVPA in Africa and AVP in Asia. So we have a consortium with the 4 networks to share also this knowledge and how through these networks we can spread the concept, and also working with Tonic and with other organizations. For us, the C3 consortium means a really good opportunity to move forward and to accelerate this route and how we can be more strategic in these complex moments.
Can I actually just
Sure.
one sort of addition, observation, comment? We all of us in some ways sort of talked about getting other investors into the space and mobilizing other investors. I think the honest truth is that the momentum, the surge, the resurge, whatever's happening, that excitement generally is coming from people. And we would define ourselves like this, that are philanthropic, right? Yeah. It's not coming from convincing, commercial investors that there's this thing called Catalytic Capital, it should be part of their toolkit. It's coming from connecting with philanthropically minded foundations, family offices, development institutions, people who at their core have impact as the mission, and showing them why they need to move beyond sort of double bottom line approaches to this and looking for how they can be truly catalytic. That's where the momentum and the traction is. I personally don't know how to get traction. I don't have any real interest in talking to sort of just general commercial investors about this. It's like, how do we move the philanthropic crowd toward this as a tool?
I completely agree with that. And it's how you can show to these philanthropists that they can innovate in the way that they deploy the resources.
Yeah, and just to add the C3 perspective there, the investments that we made through C3 from MacArthur's capital, number of them have been in structures which are not blended with other more commercial actors, but are actually just catalytic capital, what we call horizontal catalytic capital structures, where it is one pot of money, but it just takes typically more risk than others would at that market at that level, and tends to have a huge amount of impact. So I think focusing in on the impact behind what people are motivated to work towards is very, very important. And that's where the story is. There is a place definitely for blended transactions. I think Convergence is running a panel tomorrow afternoon talking about their reflections on blended finance transactions and where that is headed, and how philanthropic capital can partner with DFIs more thoughtfully. There is a place for that. There is a huge need for that. And maybe further down the road, there is room and space for engaging with commercial investors. But I totally agree with Craig. Till we are, we can get significant momentum and scale at the first end of folks that are absolutely focused and committed to the impact, starting this process of the catalytic deployment, and really sometimes moving enterprises through the pathway of deploying different kinds of capital as they grow and mature and scale, it's going to remain very slow. So I think we have a very definite focal group that we want to engage with and work with.
The panel makes the moderating job easy because they just turn them on and they go. But this gets to the meat of the matter, which is, what does it mean to be catalytic? And there's engaging other catalytic investors, but the catalytic money is supposed to be engaging commercial investors, drawing them in various ways. And there's different levers to pull on that, and different risk factors, time horizons, other kinds of liquidity things, and other things that you can pull. So this is the place where you could pop an example in, but what does it mean to be catalytic?
Well, I actually, your framing there, I do think it's important to correct one thing. You said catalytic capital is supposed to crowd in commercial capital. Like that is one potential scenario where catalytic capital might work. I think it's the rarest of scenarios that we see in our work in terms of blended vehicles that actually go and find commercial investors. And even in those transactions where we say, oh, we've crowded in a commercial investor, it often is a pension fund that has a mandate around something specifically responsible. It's not that it's crowding in a pure financial investor who thinks, oh boy, that de-risk senior tranche of this microfinance investment vehicle in sub-Saharan Africa is really attractive from a risk-adjusted return perspective. Like that is just not, like that's not happening. So I think it's just worth correcting that bit. So I think, what is catalytic? I mean, there's a dictionary definition of catalytic. I actually think catalytic capital is like just what impact investing should have been 10 years ago, but now impact investing has been sort of like made a generalist responsible investing term. And so we have catalytic capital to define things that people are doing that non-financially minded investors that they won't do. So I think it's pretty much three things. You can take risks to seed something new, so you can bring a new vehicle to the world. So this year we helped our partner Rock USA, which finances mobile home cooperatives in the U.S. We helped them launch a new vehicle to purchase parks that are not rocks yet, but that might one day become rocks. It's a small pilot, a few $1 million. Like there's a bunch of risks. They haven't done these kind of transactions before. So yeah, that's catalytic to help them get that off the ground. So that's one. So number two, you can take risks to leverage, to crowd other investors in, not the commercial investors necessarily, but like development institutions or foundations that might be doing MRIs. So you do the junior tranche of a fund, and then you see that senior level capital come in. One this year that we're involved in is Azure Source Capital. They fund small private water operators in Central America. We happen to be in the senior tranche of this stack, but IDB and Catholic Relief Services were in the junior tranche, so they are taking an incredibly catalytic role in that junior piece. I guess we're catalytic by being the senior because nobody else will do it, so I guess that qualifies as catalytic. And then third, catalytic, you can just do deals where the return is perpetually low and is never going to be higher, but needs that capital. So those are, CDFIs, like, so, Grameen America this year, or California Farm Link. And there's just tons of that. I mean, you could do that money all day long. You could do billions of dollars into that category and have huge impact without taking much risk, just taking modest return.
So, Urmi, just to push back on that, the one I love that we wrote about a lot was the SDG loan fund. It was, you'll correct me when I go off the rails here, but it was Allianz, a big German insurance company, wanted to put up something like $1 billion, but they needed some risk mitigation, and FMO, a DFI from the Netherlands, provided that, and they needed some risk mitigation, and MacArthur put up a very small amount of money to get that whole chain going. It was brilliant at this blended finance catalytic capital level. I haven't seen a lot of replication of that with other big insurance companies subsequently, but it was the classic case that Greg is pushing back against.
Yeah, I would say that deal was about, I think, like 3.5 or 4 years in the making. So I think we hope that others are able to use our learnings to move a little bit faster than that. And this is not my deal, I should say. That's Deborah, who leads our impact investing team at MacArthur, is really the person who has worked on it and has made it happen from our side. But I think couple of points about that. I'm sure that there is a huge amount of interest amongst others to replicate and structure this. We have anecdotally heard quite a bit about such interest, both from DFIs who know that they need maybe a philanthropic actor to come in with the MacArthur piece, which was a guarantee for $25 million, and FMO came in with $100,000 of first loss capital sitting on top of that guarantee. And so I think that both from DFIs and from institutional investors that then can take on the risk that is denoted by investments that use these structures, where the junior tranches make it a little bit easier and more palatable for them to look at those risks given their own regulatory requirements. So I think there is a role, but just what Greg talked about and David, what you mentioned, is a reminder that there is a spectrum of capital, right? There are a range of investors and donors that come in at different types of commitments, risk levels, impact, interest. And I'm sure you've all seen some version of this little table which starts with, donors and grantors at one end and goes all the way to commercial investors at the other end. So there is a role for everybody. I think the important thing for us as catalytic capital providers and field builders is to remember that there is some very critical work that does not get done if catalytic capital is not at the table. So to Greg's point, in our definition for catalytic capital, we talk about capital that comes in to either create impact that would have not happened, or to bring other money to the table. So this other money to the table, as Greg noted, can be folks all along the spectrum, but not operating at the same point as those catalytic capital providers. And in fact, for me, one of the lessons of sort of working in the field and talking about this is the reflection that we need to constantly articulate thinking about partnerships and collaborations in our catalytic capital investments. Because, when we come in with catalytic capital, let's say debt instruments or equity instruments, we are often sitting on the shoulders of those who provided grant support to those enterprises or created an early stage infrastructure that allowed those companies to get started, get out there and start raising money. So there is a role for all of us to play. At the same time, I think for this to create the kind of impact and change that is really needed and that we are all focused on, I think we have to be honest about who those partners are going to be and not sort of start pitching this as something that is going to take us to the gap all the way to mainstream money. It is not.
Right. Carolina, I know Latimpacto is part of the family of the what used to be called the venture philanthropy crowd, and so it sort of points up Greg's point that some of the impetus comes from the philanthropy side. But just who do you see in your ecosystem, and how does catalytic capital actually play out?
So I completely agree with what it means to be catalytic and how you intentionally are using flexible, patient, and risk-tolerant capital to unlock impact that wouldn't be possible in other way. So when we see the region, we're seeing that more philanthropists are also looking how they can innovate in the way that I deploy my resources. So it's how we can bring these philanthropists, but also it's how we can work with corporates. It's how we can work with impact funds as well, understanding how you need to change the way that you are designing your projects. And as I mentioned before, it's not only projects, it's how you can make the change, thinking with a systematic mindset, and it's how you can design for leverage. So it's not just expecting outcomes, it's what is the change that I will create with my money, it's how I will invest in learning and transparency, so sharing what is working. So something that we're promoting all the time at Latimpacto and with our sister networks is how we also build more cases. So right now we have more than 115 cases, and most of them right now, as part of this partnership with the C3, we are building specific cases showing how you can deploy catalytic capital. You already mentioned convergence. So for us, bringing convergence into the region and also showing, okay, what is blended finance, what it means, because sometimes there is a lot of concepts in this world, but I completely agree with Greg that it doesn't matter the concept. What it matters is what is the outcome that you are expecting. So how you can engage, and it's something that we're promoting since the beginning, since we established Latimpacto since 5 years ago, is understanding the continuum of capital. So for me, it's not black or white. It's not here philanthropy and there impact investing. It's how you can combine different worlds and how you can bring different perspectives, type of risk, type of patient, because sometimes I want to be more patient and maybe you're not. So how we can combine our interests, and beyond of our interests, what is the change that we want to create? So for us, the most important issue that we want to highlight working with the C3 as a network is how we can bring more practitioners into this practice, understanding and how we can help to leverage their impact. So it's what we do all the time. So for instance, we also, because we have 3 specific pillars. One is how we can promote more knowledge, how we can promote connections, so it's how we can, connect different peers to leverage their impact. And the third one is how we can mobilize together capital. So we are not starting with the field definition of Catalytic Capital, but we have a green climate fund that we are working with Coca-Cola, Bayer Foundation, the Inter-American Development Bank, and the Green Climate Fund. It's a small fund if we compare with the big impact fund. It's only started with $5 million. But something that we are promoting through this fund is supporting the whole ecosystem. So we are working with intermediaries, and then we will support almost 400 entrepreneurs. And then they will receive non-financial support and financial support, and then they will be part of the chain of these big companies as Coca-Cola and Bayer. So it's the way that we need to innovate in the way that we deploy resources, in the way that we connect with others, the way that we are here, but it's not just, okay, we are ending tomorrow SOCAP, and then I want to see you next year. It's how we can continue this conversation all the time. And having this kind of network, having C3, is the opportunity to continue connected and to continue learning and having ImpactAlpha. All the publications that you are promoting around Catalytic Capital, all the time that I read your articles, I say, wow, it's an inspiration for me. So we need to have this kind of inspiration from all of us. It's not just coming here, learning, and go to our own desk. Okay, what I would create myself. It's how we can co-create. So it's something that we're promoting all the time.
And I would say, as a message to fund managers and entrepreneurs, since that's the majority of the audience at SOCAP, I would say don't be afraid of grant money early on in the process, right? I think there was maybe like a historic resistance to, oh, well, if we're a hybrid organization, if we're a nonprofit, if we're organized as a nonprofit, then these big just thumping impact investors are going to think we're subsidized and not want to invest. So I just think that I don't think that works. I think grant making is a huge part of why many of these models work, whether it's technical assistance or it's fund design early on, or it's perpetual subsidy of operating costs. One of the first investments we made 12 years ago, our old friend Willie Foote is in the audience from Root Capital. And, those early days, Willie was raising grant money, putting together these vehicles, raising, deeply philanthropic subordinate capital to raise, foundation debt on top of it. And, at the time we were like, is that the answer, or these other commercials? So it's taken us, many years to realize, we had the answer from day one, which is these combinations of capital that really allow things to work in the hardest sectors and places in the world.
That's a good time to point out that there's a QR code on the screen, and if you click on it, you can send a question. And Andres brought me a couple, and one picks up just on what we're talking about, and kind of the question that always comes up in this discussion, which is, how do you tell what's a catalytic investment versus what's just a low return, or even a necessarily a maybe not a bad investment. And so I might mess this name up. Vanamadi Matedi, I'm sorry if I messed that up. Is catalytic capital just a repacked form of subsidy, or does it represent a genuine? Okay, you can come up and answer. Or does it represent a genuine paradigm shift? So again, how do you know? You mentioned subsidy. How do you know what subsidy? What's the right level of subsidy? How to think about subsidy? How you've also talked, Greg. Bridge to somewhere. How do you think about how to assess where it's going?
I mean, the question's funny because the question has a tone as if subsidy is a pejorative, as if that's a bad thing. I mean, the world is subsidized in so many ways. I don't think there's anything wrong with the idea. I don't even. Yeah, I mean, so I guess I feel like the ultimate goal, certainly of us working in poverty, is to increase incomes and livelihoods for specific communities, and we should be trying to fund the most efficient, scalable, sustainable interventions that do that. Sometimes that will be pure grant making, right? And I think we always need to be putting our interventions in competition with the counterfactual, which is, the sort of give directly, just give a pure cash transfer. We should believe that our low-income lending in a recycled fashion over years and decades will lead to greater increases in economic livelihoods than just simply giving the cash away. If the answer was just give the cash away, then most philanthropists just give the cash away instead of looking at these kinds of interventions. So I don't see it as a competition around subsidy. I see it as an experiment in how to fund the right interventions to have a measurable increase, have measurable improvement on poverty.
Yeah. That is, thank you for that question, though, because I think it helps us address something that comes up quite often. When we were launching the Catalytic Capital Consortium, we thought about this language quite a bit in this question of sort of subsidy and concessional money. And to Greg's point, I think it starts with knowing what the problem is, what is the capital gap we are trying to address, and then what is the solution that will help address it best and most efficiently, right? So it's not a question of saying, if we have cheap money, let's use it for ABC purposes. It's very much grounded in the discipline of understanding what the gaps are and what kind of solutions are going to help that gap go away. Underlying all of this is our focus on better outcomes for people and the planet, right? So that's where we are all starting, I think, as catalytic capital providers, and then thinking through what is the tool, the instrument that will best serve the community that needs this capital gap or challenge addressed. So it is sometimes going to be catalytic capital, and sometimes it's going to be grants, and sometimes it's going to be maybe state support. Greg talked about the kinds of investments or kinds of needs there are. So we see catalytic capital as having sort of three primary roles. The first is seeding, where you are getting new things off the ground and they're untested and unproven models. The second is scaling, where models are kind of off the ground, but there is still not enough traction with other closer to mainstream providers of capital, and catalytic capital gives that push and impetus and demonstrates the value of that type of investing. And then there is sustaining catalytic capital, which is essentially saying, look, this is never going to yield money or solid returns for the investors, but it is worth doing for reasons of impact, community well-being, and related sort of values or ideas. So I think all of those are important. We still call for rigor in how we practice the deployment and the use of catalytic capital. No investor will sit here and say, oh, this is catalytic, so we don't have to really think about the terms of the investment. We don't really have to think about crowding out other sources of money. We do think about those things. And I think part of the challenge and the opportunity of being a catalytic capital investor is that you are thinking much more holistically than if you just come in at a transaction. Yes, you are doing a transaction. At the end of the day, if you're not deploying your money on the ground, there is no catalytic capital and there is no value from it. But I think that we are doing all of that really from the perspective of thinking about what are the factors that support a solution here and how we can build a pathway to better outcomes and better solutions by deploying this capital rather than going it with other forms of money, including grants.
Yes, just to complement what Urmi and Greg are saying is that what is the change that you want to see at the end? So sometimes we're just focusing in the instrument, thinking that it's a science, but what is the change? What is the impact that we want to create? So what is the right capital that you need to use? Who are the best partners that you need to partner with? So at the end is how do you understand this whole ecosystem, all the financial instruments that you already have, and how you can create this change. So what we are doing all the time with our members is, okay, let's come here, understand what is the concepts, and what is the change. What is your theory of change? And how you can use all these instruments, all this market to create a change. And so at the end, it's not rocket science. Is understanding that we are working with the communities. And yesterday, talking to you, we were talking about, okay, sometimes we need to understand that maybe in Latin America, you won't find the big returns that you can find in here in the US or in Europe, but working with the communities. And they are amazing innovators. And maybe you will find other type of solutions that you never thought in your desk. So it's how you can change your mindset as well.
Right. I should have done this at the beginning, but let's have a show of hands here. And there'd be two rounds of this. So if you're a funder or an investor or an allocator, raise your hand. Okay. If you're a manager or fund manager or an intermediary of some sort, and you're deploying money, okay. And if you're an entrepreneur or a founder or a venture on the ground, oh, it's pretty even among the three. And then here's the second round. If you're a funder, do you deploy catalytic? I should have done this when you hold your hands up, then you could see the hands go down. But if you're a funder, do you deploy something could be called catalytic capital? All right. And if you're an intermediary, have you raised or deployed, I suppose, catalytic capital? All right, so these are practitioners here. And then again, the last one on the founder or the venture or the entrepreneur, have you received or somehow leveraged catalytic capital? All right.
I don't know, in 10 years of coming to SOCAP, that was probably the most allocator hands in a room that I've seen in 10 years. That's actually, maybe there's a resurgence.
Greg, as you can tell, is always kind of skeptical that we're going to really mobilize many more LPs, but maybe you're going to change your mind, Greg. Yeah, maybe. Well, actually, that leads to this question about, and you raised it about philanthropic capital, because moving commercial capital to say, oh, we're going to take more risk or lower returns may be harder, is moving philanthropic capital to say we're going to actually have an investment practice and think about it rigorously and not only limit our toolkits to grant. Is that a hard lift?
I can kick us off, because this is a constant question that we're thinking about at C3 with our network partners, including Latimpacto, and I think I now can share some very sort of deep insights from a first-hand experience. I think what we're seeing is that there is a tremendous interest and sort of curiosity about catalytic capital. When we launched C3, we always sort of said that this is meant to help impact investors who are already in the fray deepen their practice with catalytic capital. Instead, what we have found is that there is huge interest from those that are philanthropic actors and that are transitioning to some sort of investing that aligns with their values. And they are very interested in going straight into catalytic capital. And this is both a tremendous opportunity, but also kind of a sort of fun challenge for us to work with, because we are not sort of helping people just see the ins and outs of how to deploy catalytic capital effectively, but we are actually helping them think about investments versus grants. And there is a huge opportunity. I mean, you all have talked about the interest from family offices. Those numbers are huge in terms of potential. And I think through the 2 days of the Catalytic Capital track, you'll hear from folks about different structures that are trying to create more solutions that allow those who are donors and grant makers to make this transition quickly.
Yeah, I think we see a lot of activity coming out of DAFs these days. We're sitting here talking about DAFs for years, and I actually think like there actually is like a high volume of activity coming through folks like Impact Assets or CapShift's business that works with a range of different DAF holders. Our friends at Global Partnerships, who's a impact-focused MIV, just launched a new sort of DAF pipe into their fund. So I actually think there's that pool of capital is increasingly getting activated, which is exciting.
And do folks need to know what DAFs are, donor advised funds? The quick hit on it is accounts that have gotten the tax benefit already and are waiting and have generally been used for grants, but increasingly can be used for investments as well. And so folks are willing to take more, be more catalytic in it because it's already been allocated on that side of their ledger. Okay, now the flip side, and you sort of said this was sort of the not a real thing, Greg, but there is a crowding in of commercial capital part of catalytic capital. And so the question from Anonymous is, what have been the barriers to crowding in more private sector capital? Are these barriers addressable? And the thing that always comes to me mind is, some risks, it doesn't matter how much risk mitigation is, the investor's not going to go there. They don't invest in that geography or that sector, what have you. They think that it's too, they need 100% guarantee or what have you. So are there things that have proven to be effective in crowding in commercial capital? You're giving them a subsidy in a sense that they wouldn't otherwise get.
Yeah, I think, David, this is a really, really tough one to crack. What we have seen is that there is a huge sort of education, awareness building element to this. And even in those situations, as sort of using some of the examples that Greg talked about as well and others, there is oftentimes not an easy and direct role for private money to play in many of these transactions. So it has to be a transaction which is in a certain part of the market with a certain focus on scale, growth, having already developed a model that is generating decent returns or income or at least revenue to start with. And in all of those cases, what we have heard from folks putting the transactions together often is that it is very costly and often too costly to have those conversations happen for people to come to the table. Like, David gave the example of the SDG loan fund, which is a fairly complex, large structure. So doing this at the unit level, I think, is far more complicated and maybe is not sometimes the best use of our time and resources. Having said that, I think there is a set of opportunities that are ready for more private engagement. And in those cases, we see some interest and some engagement. And then, of course, there is always engagement from private actors that have particular impact or responsible investing mandates.
Yeah. I also think this is very sector by sector. So my flippancy is really, very focused on deep poverty interventions, either in persistent poverty areas in the U.S. or internationally. I think there are many sectors, if you're investing in the U.S. or in Europe, where there are these opportunities. So you could point to climate interventions. We've been a long-time investor with a firm called Catalytic Capital. I heard last night from someone at Galvanize. There are certainly interesting things in the sort of energy efficiency and sustainability space that will crowd in private capital. Affordable housing in the U.S., we were longtime investors with Jonathan Rose. Like, there are some, meat-eating commercial investors in there for the returns. Like, they are, very much an impact-first firm. But I think you can find those interventions. Those interventions generally don't get down to the lowest income communities. But I think depending on your sectoral focus, like, my cynicism could be dialed up or down.
Okay, well, that's actually a good jump to another question here, which is sort of the moment question, which is, as the U.S. and others pull back on public sector funding, both globally and at home, how is this impacting how other entities are approaching catalytic capital? So is there a stepping up that's happening, or that could happen in a moment when obviously capital is needed for those vulnerable and low income populations? Here you go, Greg.
Well, I think a peer leader of a large institution wrote an article saying that we don't have to worry that commercial capital is going to solve it all. But I don't think that's true at all. I mean, I think that we are going to be living through a difficult time in many of these sectors. Certainly internationally, funding from the DFC and other international development institutions is absolutely indispensable to many of the interventions we fund. Funding cuts from USAID crippled, a bunch of things in our portfolio. So these are real deep gaps that we as a sector are going to have to fill. The big checks that those development institutions write, those are not easy lifts to fix. Those are $50 million, $100 million checks at a time into funds. And there's not that many, philanthropic actors, foundations that can fill those chunks. So that is a real gap that we all are grappling with. Certainly energy policy in the U.S. is, one that has had a big impact on many of the things that we fund and that we're watching closely and thinking about ways to move around it. I actually think there's probably more ways to maneuver around that, in the sense that the economics, there's just more sort of, juice in the economics to sort of navigate eventually. It will take time for people to rethink business models, but I think in the long run, the energy transition in the U.S. and developed countries will continue on. It's more these sort of global interventions around poverty that are really going to be hamstrung.
Yes, and something that because in Latin America has been dramatic, the change, not having USAID and other organizations that were supporting not only from the US, but also from Europe. So not receiving the same amount from international cooperation is how we need to restructure the way that we partner with others. For example, is how we want to bring money from the corporates. So we won't fill the gap, I completely agree with you, Greg, but it's how we will continue supporting these kind of projects. Because at the end, we continue with the same problems. The communities are needing this money. So how we will restructure the way that we were working. And sometimes, looking at some projects with the communities that USAID were supporting, we found a lot of U.S. agencies working in the same place with the same communities. So maybe it's time to restructure the way that we will deploy the resources. So it's not thinking, okay, I want to stop the support that I want to give you. It's how I will rethink the way that I will support and what I am expecting from the communities as well. So we cannot stop. We should continue bringing hope and supporting these communities, but it's the way that we need to shift the way of understanding that we won't have this money, but we need to continue with the development of this community, and even more with those. I'm talking about climate issues. It's an opportunity right now to invest on climate issues. So we are supporting all the time and showing all the opportunities to work on innovations on climate issues in Latin America, particularly in the Pan-Amazon country.
Great. I want to give each of you a chance to sort of talk about next steps or a call to action, but I think we also are supposed to fulfill our duty as the kickoff of the track. And so you could have a full day of Catalytic Capital programming here at SOCAP, directly following it at 10:45 today, hitting the reset button, unlocking the next era of impact investing, the financial realities of managing impact-first investment funds. At 2 o'clock, expanding the capital continuum for all businesses with Catalyze and JP Morgan Chase. And then at 3:45, Urmi's colleague John Ballback standing in for Deborah Schwartz, and Keisha Cash from the Impact America Fund, Santiago Alvarez from Alive, which is in Latin America, and Johanna Wolfson will be talking about catalytic capital in practice, strategies, challenges, and innovations. So that will get down to brass tacks and some examples. Are there other ones, Urmi, that we should flag?
No, I mean, they're all interesting, and we are so excited to have this set of sessions in front of you and be part of the group that's presenting it. I think there are interesting lessons from all of these. The other ones that I would also call out, there is one, I think it is tomorrow, which talks about reaching underserved communities, the impact of public-private partnerships. That's very much centered in the US, and I think has really, really important lessons and reflections on ways to stretch the impact of our catalytic capital dollars much, much further, working in partnership. And then talking to this sort of huge gap for serving underserved communities across the country, but even more broadly as sort of templates for thinking about other countries and markets. Yeah, I think I would add that. Carolina, anything for you?
Okay, so maybe just briefly, what would be your call to action? What are the ways to overcome any challenges you face, in particular with Catalytic Capital? And we'll go Urmi, Greg, and then, Carolina, Greg, and then Urmi, you can close us out.
Yes, we have 3 minutes. So it's how we can continue this conversation and how you can use all these networks, C3, Latimpacto, and other networks, Tonic, and other AVPN and all these networks that are working with these issues, is how you can connect with others, is how you can continue understanding what is the meaning of this concept. And it doesn't matter at the end the concept, it's how you will deploy better your resources. So the communities needs us, so it's how we will continue improving our impact, and we cannot stop at this moment. So it's not saying, okay, because we have these governments, this complex geopolitical situation, it's how we can continue, and it's our role at this moment, bringing this hope and our commitment.
Great.
Yeah, I guess I'll end on a note of fostering collaboration. So one of the programs that I've helped Urmi launch out of C3 is something called the Catalytic Capital Dealmakers Roundtable. It's quite a mouthful, but it's a group of LPs, family offices, foundations that are all active practitioners deploying, each millions and millions of dollars every year into Catalytic Capital. We get together quarterly, we share deal flow, we share memos, we share whatever it takes to get action into those deals. If you fit that mold, if you're an LP that is that is active, currently active. So it's not a sort of beginner's forum. But if you're currently active and you want to share deals in that kind of setting, please get in touch. I think really that's really my call to action: is find other people doing the kinds of deals you do, share information. My email is greg@ceniarthllc.com. Feel free to shoot me a message. We share our deal flow, pipeline, whatever it takes to try to move the sector forward.
Let me just jump in before Urmi. Greg, you said the other day that the first rule of the deal-making roundtable was not to mention the deal-making roundtable.
I know.
You're coming out of stealth mode here.
I just there were so many alligator hands. I was like, shit, maybe they're. It's rare. It's rare that I'm like tempted to. But yeah, I'm impressed and I'm surprised. So I pleasantly surprised to see so many allocator hands go up. And again, I think it is a group of experienced practitioners who it's not a place for people who are like, hey, I want to experiment with a new deal. It's a place for people who have 10, 20, $100 million in budget every year for Catalytic Capital, and who have real diligence behind those to share and real thinking. So it's anyway, I'm tempted. If one of you is sitting out here, please send me a message.
Actually, again, sorry, Urmi. Something that we wrote about a week or so ago that may be of interest is Trim Tab, and maybe you've heard of it. And I saw Trace Welch is running around. Maybe he's here. Are you here, Trace? Okay, Trace Welch back here, and you can get the details from him. But again, it's what is to the point of collaboration and co-investment, and not having to do all of the hard work of all these wonky, complex deals, but being able to deploy the capital through others that have done that homework for you. So now, Urmi, you get to send us home.
That's thank you, David. So I think two things for me. One, really, as an investor, we urge you to think about the entire sort of context around the investment you're making and the problem that you're trying to solve with that investment. So thinking about all the various infrastructure and investee specifics that influence the need for capital, and why that capital is not at the table as easily as, let's say, other investments that are closer to market. I see Harvey sitting here. Harvey is working on Capital Gap's guide for investors with C3. We hope to have that out in the next few months, which really talks about thinking about the entire context and ecosystem sitting around an investment, and how to make your response as an investor very thoughtful, taking into account some of the barriers, sometimes working with grant makers, sometimes working with government and regulators to really enable market rules that are supportive, sometimes thinking ahead to investors that will step in when your partners graduate down the road, to other forms of capital. So really thinking about your investments not in isolation, but in the context of all of these factors, I think that positions us a little bit better to get real success and impact down the road. And then the second piece I would say is just in the spirit of the Catalytic Capital Consortium, what is really important for us is investors activating investors. Greg just spoke about the roundtable. Even beyond that, I would say all of us are not just doers. We are all leaders. Everybody has a responsibility to bring others along and bring people further into the space. That is going to be absolutely critical if we are going to make some bigger inroads than we have been able to so far. Thank you.
Well, that is great. We have been leaning in as well and trying to step up, and we've been we're getting the hook here, but to the point, LPs or allocators in general, LP can stand for leadership potential, and Greg will help you join the roundtable. Others will help foster that, but it's time for folks to step up, and there's plenty of now tools. There's no more excuses that you can't do the deals, find the deals, understand the deals. Then the next step is send all those deals, the news of those deals to ImpactAlpha. We'll write them up and send them back to everybody else. So thank you all for coming. Enjoy SOCAP. Enjoy the Catalytic Capital track.